Hello, here we are. We fixed it. I'm Tradespotting, and this is live technical analysis across the markets on anything you want to look at. Thanks so very much for your patience. Today, where's Seamus? Market crash soon, surely. Well, everybody's calling for it, apart from Tradespotting and Rocky, who were calling the local low there. In particular, there was a conversation with this one perennial refuses to learn chap I was speaking to there at the low on Bitcoin. And you try coaching somebody. Some people just will not exceed a certain level, and you have to try loads of different ways to help coach them. Anyway, this guy was insistent that Bitcoin was going to go down. Everything was terrible. The amount of times you can explain the charts, it sometimes will not overcome a tip taker's perspective. If you're somebody whose opinion is informed by other people's feelings, and that's who you are, then sometimes you'll hit a ceiling when it comes to trading, and you're going to have to be a different type of person to be better at trading. You're going to have to think deeper. And this is not yourself, Seamus. You're at least questioning what's going on and have your own thoughts, feeling about it. But there's other people out there and they're like, no, this is it, that's it. And you're like, man. And by the time you finish the conversation, you're up 5%. And their conversation is encouraging other people to take the wrong trade and stuff like that. So it's and then, if you're managing a community, you want everybody to level up together. So, certain people will get good and then seem good to, from the audience perspective. But they can still, of course, not everyone's like everybody is susceptible to not knowing what they don't know. And so you really want everybody to be leveling up together. You want to make sure that no one huge gap in anybody's knowledge starts persisting and becomes hereditary and stuff like that. So there's been a lot of that recently, when everybody's completely got the wrong side of things. But at the same time, so we're traders here, right? We're traders here. So when Rocky and I were calling the top, we were saying up at 46,000 and that, and we didn't manage to hold 40 on Bitcoin. These are the places to look to take shorts from, and to be weary of downturns. Not at the bottom, right? Not at the bottom. Not this is so I have to be careful, right? I have to be careful. Netflix is already up nearly 4% today, right? This is a higher low in this part of the trend. And people so many people, you don't see it there, I'll get it up, right? But so many people were wrong about this, right? So many people were so wrong about this. And I don't want to even say their names, because it gives them exposure when really they should be buried in the sand, right? They should be buried in the sand, and they're so absurd. Their technical analysis is so absurd. They don't they're just not able to conceptualize this. And they were called. They'd be the same people that would be saying everything's going to die here, at $8 on Netflix, and then it up towards 600, 700, 800. That's what happens. You get entrenched in their opinions too, because they feel other people feel and so on. And it's a fast way to get liquidated when you're trading. Fast way to get liquidated when you're trading. So, so there's lows, there's highs. You want to be weary at the tops of trends and then cautious, but then, these are when there's blood in the streets. This is a monthly time frame. There's a 200 period moving average. That's Netflix. It's up 3% today. There's obvious opportunities for it to go down lower. I'm very much expecting something like that to potentially be tried. But with regards to the entire market crashing, Famous Seamus is a really nice guy. So none of this conversation is directed at you, Seamus. This is something I've been aware of as I've spent all weekend pulling swords out of my back from people who won't refuse to learn lessons. What chart is this? This is not the one with all my drawings. My drawings? Where are my drawings? Anyway, so daily time frame. Well, we don't need it. We'll turn off these drawings at the minute and spread things out a little bit. Monthly, you know, that's not desperate yet, right? That's the reason that you would look at this and maybe be a little bit worried is this candle close here being so much lower than this previous candle close, right? Obviously, that's like, but you've had to have experienced that. All of that happened, right? That was an experience that's in the past. And you can see here, there's a previous wick low just below us, which we've bounced off already this month. This has only just started. So there's that, right? That's interesting. See, there's also this candle close here. And that at 412, we can see at the lows, we managed to hold 400 so far, right? This is not the time to panic. This is the time to be weary, you know, especially on this high. You saw it bearishly divergent on the RSI on the monthly time frame on SPY. I mean, come on, eh? So obvious, right? Yet there's people out there on Twitter and everywhere else, and they're like, oh my god, everything's so fucked, but everything's so fucked, I'm amazing. You know, they all want it, because this is the thing, right? If you're not acting emotional on the internet, if you can't be seen to be authentically trying to educate, then nearly everything that anybody ever says on the internet is trying to self-edify, trying to create an impression of themselves for themselves so that they can think about themselves because they're obsessed with themselves and other people's opinion of themselves. And so much of that's what attracts people to places like Twitter and doing these sort of YouTube videos. And it's why it's so very difficult in that environment to stick to being yourself and get grow a large audience, because everybody wants to hear all that bollocks. You know, everybody loves hearing that bollocks. And nobody likes hearing when I say to people, this is bearishly divergent, right? On the monthly time frame up here at 473. Everybody's like, no, because I've got calls and I am so excited about my future millionaire status. And I've no way I'm listening to Tradespotting. And it's just fucking awful, right? And so they watch the other YouTubers who they keep them feel happy as prices are fucking, right, like awful. And then they get down to here, and those poor YouTubers and those idiots on Twitter with the massive cake holes who never shut up. They're like, oh, everything's going to die. And you're like, what a genius. What a genius. Wow, we're only down 20% already. We only put in bearish divergence on the monthly time frame absolutely ages ago. You genius. You know, yeah, there they are, right? And they've got a sword. It's in my back. It's got their fucking name on it. And they used to fucking learn with me, but they thought they'd reached a fucking... And fuck you guys. Fuck the betrayers. Fuck the traitors. Fuck them. And they're going to get everybody that follows them wrecked. Fannies. Fannies. And if you don't know who they are, I'm not bringing any more breath to that loser twat and all his loser mates. Fuck them. Making fucking websites about you and that, and they all clam together and that, act like they're all acting individually, but all of their fucking little centralized scheming was exposed. They're such losers, and those people who follow with them are walking off the side of a cliff, and the rest of us will have fuck all sympathy. Fannies. So many fannies. So it's at 412, you know, like, there's like volume. What do you think was happening with that volume, especially with price subsequently going to the top side, eh? Oh my God. Hey. This is a clip for GME. Good morning. Welcome to the markets. It's fantastic. Price action currently up 0.26 today. That's percentage. It's 124.74. And on the 15-minute time frame, you can see there's a little bit of volume come into the charts here. They've had a positive cross on the MACD, despite the fact that you're below the 200 period moving average. So it takes a little bit of enthusiasm. We're starting on a 15-minute time frame. You can see down below, stochastics, not particularly interesting on these time frames. RSI below the center line, not great, despite the fact that you're above your own moving average. You know, there's a touch of bullish divergence here. The lower low on price action, higher low on the RSI, and you have got the moving average there. So perhaps you're in the process of testing an oscillation to the top side, and if you were to take a line across all those most recent highs, you'd see that would be above here, your 50 simple period moving average at 126. and approaching the trauma line of the trend up at around 128.59. At this stage, you would have managed to recover the moving averages, but you've done that 3 times already and failed to put in a higher high. You have now subsequently got the chance of putting in a higher low between these two areas, and as such, you might be at a trend inflection point. There's the 200 period moving average above you at 135. Look left, that's also horizontal level of resistance on this time frame. I'd expect you'd find resistance up around those levels. Oh my God, this is incredible. Right, so we're only on a 15-minute time frame, but that's magic that we can do that stuff so quickly. 30 minutos. There's those resistance levels marked in even more clearly. You have not yet had the cross on the MACD. The stochastics still not particularly relevant on this time frame, but you have made it back above your own moving average, though again still below the center line. And do you see a touch of bullish divergence there? Not quite so clear on this time frame. And obviously a higher low as yet. There's a rejection wick from this previous level of support. So subsequently a bullish candle close. Good to see in 30 minutes. What's it look like on the hourly? Well, folks, on the hourly, give me my oscillators. Not so great, continuation divergence at this stage leading to lower lows on the trend. Resistance, as we spoke about, now very firm at those levels. Not getting your cross, you're obviously significantly below the 200 period moving average. The trend trauma would start around 140 at this point. It'd be back above Rocky's flash at 138.2. We previously got the most recent sell signal and not so bad, but also not crossed and miles away from the 200 period moving average. And there, what was continuation divergence on the RSI. And then a touch of potential continuation. You saw that the histogram on the MACD didn't completely collapse, and that's quite positive on the early time frame. Looking left, you can see this is a lower low on price action, but it's a higher low on the oscillator so far. And so if price action was to go back to the top side from this point, you would have a touch of bullish divergence looking on the candle closes there. As such, let's take it from the high in this previous part of the trend down to the low. 236 is at the body open of this 1 hour candle at 123 at the 236. And this would be an entry on a short-term oscillation to the top side of that trend. Maybe that only makes it back up to the golden pocket, which is also confluent with those first of those resistant areas we talked about. That's only at 128.35, so you maybe get 1% to the top side. Is that able to be traded? Not necessarily. Not necessarily. Certainly not in any easy way. Tell me. 2 hour time frame. And let's see what the oscillators look like in the bearish control zone. That's terrible. We've had what is a failed attempt to some momentum to the top side there with the moving averages. Got a flattening of the trend, trauma back above 100, one of the 1.618 is full extension. So you'd have to put in a serious test of the overall formation at this stage. That would be this downward sloping trend line here. You'd put in a serious test of that should you want to then subsequently get Rocky's flash, achieve above the 50 simple period moving average, which is positive in that it's a positive splay. It's above the 200 simple. So the short-term moving average is higher than the long-term moving average. It speaks to a perhaps acceleration of a trend at this point. But now that you've had to find it on the 2 hour, and of course it's not below, so you'd need things to pick up on the lower term time frames, right? So this is the picture that's evolving here. You'd need a little bit of increased momentum on the lower time frames, regardless if you start breaking highs on horizontals or not. I'm not talking about price action, I'm talking about momentum. You need to see that build up until you start making significant moves on the 2 hour time frame and above, where you do have potential signs of bullishness, but also you're trapped in the bearish control zone and the histograms like that. Meep, I'm crap. And then again, your stochastic's not going to give you anything really useful yet. The 2 hour, 4 hour, now we're getting really significant candle closes here. You can see that potentially, where would you mark this in if we were to draw this as a downward sloping? Oh, there's loads of lines all over the shop. Just want one, please. This one. They'll start with a low because it's tidier up here. Right. And so perhaps this is downward sloping wedge. Obviously, a failed wedge, as Rocky clearly points out many times, can become a channel. And what would that look like? Well, if this is the extremity of the top side, it'd make it easier. And then we'd measure this with the wicks, which would suggest that we've got a potential further extension to the downsides, which should take us in around 117 to perhaps this horizontal in the golden pocket retracement, $111. And I strongly suspect that that's where Jamie's going. But that hasn't yet been the picture. You know, we still do have the potential for positivity if things build up on the 2-hour. Haven't yet had a negative close on the 4-hour. I can see where it would come in at, though. You're below this 236 already. That's really, really crap. It's a candle closed down there, the first one you've had since price action's been at this level on a 4-hour turnip farm. So that closes this 4-hour candle below that 236, then price action's going to go down. And it'll likely go an extension within that previous Fibonacci if you wanted to measure it from the previous fall up again, which would be here. That's the low. This is the high of the subsequent moves. There's the 236 that we talked about. Here's the 1618 at that same area. You failed there. The next one, 2618, is at 118, and the 3618 down at 113. You know, you sort of stair stepping way down into 109. That's like quite easy. You could follow this Fibonacci and not break this overall formation. So that may well be what happens. You could also make a higher oscillation, and you can see where that might come in should you break that 236 and go back through the golden pocket. The extensions on the top side of the other Fibonacci, the 1.13 up at 133, 1.618 up at 139. Those are also on the way to those previous levels of resistance. And again, 4-hour, you've got a 50 simple above the 200 period exponential. So opportunity to test these areas, and then you could see that might potentially break this part of this downward sloping channel, though, which is asking an awful lot of price action, and so is quite unlikely. So, and especially in a 4-hour time frame where you've got this continuation of a trend so very obvious, stochastics now starting to mean something are in the toilet. You've got nothing like a potential cross on the MACD, and the RSI looks like it's coming home when it's down here in the bearish control zone with the way that this inflection of the oscillations has been recently. Now get out of my face, extra Fibonacci, and you go back where you belong. If that even is it, it seems a little bit out, but what ifs. So not great on a 4-hour time frame there, and then down at the daily, yep, there it is, the big obvious golden pocket, the previous 236, downward sloping but relevant demand line, the bottom side of this current formation that you're in. It would speak to continuation now that you've lost the 50 simple itself below the 200 period moving average. The trend trauma line is above us. We failed the last time we were there. You got this other downward sloping demand line, which is a number of Fibonacci levels back into your previous move. It may well be that you test them if you don't hold this golden pocket, but that's the first place that you'd be looking for really good potential entries if you were very bullish, right? If you're very bullish. This is the basis line within the overall channel. That overall channel's slightly more obvious on other time frames. We'll check out in a minute. Stochastics in the toilet, they could turn around, but like I say, you need to see momentum building from the lower time frames rather than the higher ones. And as such, you know, you're not getting that yet. So, and then continuation on the MACD, I mean, it's only just got its confirmation in that the signal line's gone through the center line. That all happened as price action was below the 200 period moving average. The MACD's crossed here and the start of a negative trend with bearish divergence. You know, that is going to take price action to the basis line of this channel. This is the channel showing up here. As you can see, price action has been putting in on a macro time frame, lower high, lower high, lower high, lower high, etc., etc., etc. Down at these lows, there is a tiny inflection. Something different happened in here. You had bullish divergence, lower low than this previous low, but the oscillator's obviously higher. Didn't have that on the MACD, and the MACD had a confused picture. So at this stage, it's not all on that one signal. And then you had a cross on the stochastics, and that was very strong when it does manage to get back out of these areas, especially after the first test on this time frame and then push to the top side. You usually get a strong move, as you can see. These areas, that was trying very hard from this low here, making it only to the basis line. That's how you see this, how this formation, like how it's relevant to price action in a number of ways. It's not just the obvious highs and the obvious lows, despite the fact that there wasn't even the momentum to take price action here. As you can see, it still went there lower. This is obvious, right? It defines itself. And then not just that, but in the basis line, it's dead obvious, right? It's like you didn't reach the top, so you stall at the middle, right? You come back from a test lower, you stall at the middle. Same thing. You get above it, oh, you failed. You stall at the middle, right? Get to the top, middle, right? Anyway, right? It's dead obvious. So that's the daily. And then go up, skip the 2D. Whoop, we skipped it. And just so that really we can get on a picture of what you need to be as a trader here if you're holding something long term or if you're in a long term move. And like, this is the thing, like people say like, oh, if you're a trader, you do X, Y, and Z. If you're a trader, you'd be like, whatever. And you're like, well, no, not really. If you're a good trader and you want to help people, you probably suggest possible options. And then when they're doing things wrong, you might point it out. And if you consistently do it wrong, you probably would get frustrated. But you're not... like anyway, right? So why am I looking at this? Because we've been talking about price action as being quite negative and bearish for a while. The implications from these artifacts on the charts, those areas where the best opportunities are presented, they're below where price action currently is. And so the areas above, which we're all looking to get to and target, they'll be more realistically a short to medium term target when we've achieved these objectives that are slightly lower. And I know that sounds counterintuitive, but we want the price to go up. It's like, well, we do, yeah, we do. But it's done that a number of times and not gone higher than these shitty levels. Are you happy for it just to go to these shitty levels, right? In which case, why would, like people like myself who bought it down here, they're not going to sell it at this area. That'd be ridiculous. And they're not going to sell it there either. It's been up here. That'd be ridiculous. Yeah, but we actually know what's going on the chart. So we're not going to talk about it going to $1 billion tomorrow because that would also be ridiculous. And, so you have to like square all those circles in your own mind. If you're not capable of doing it, you're going to have to fucking figure it out, right? So there's 200. Thank you very much, natural friend. You are a friend. Diane, get the printer on. Tradespotting, you're a twat. No, not r. Oh my goodness gracious me. There it goes. The printer's working. Oh, it's great, isn't it? No, nothing means as much to me as loyalty. Damn right, I'll do that. Anything for you, buddy. And then it'll probably come on this one because I got that on, this on. Did I have this on? This is on. Work! Anyway, yeah, loyalty. It's the best thing ever. It means so much. $1 billion? But Tradespotting, that sounds unreasonable. Yeah. So, I mean, let me get back to that just as... and why are you not doing your job? Do your job, mate. And yeah, loyalty, right? Yeah, so loyalty. So you put this is the thing, right? With this, what we're doing here. Why are you not freaking working? What do you mean? And loyalty. As I was saying, loyalty. Yeah, and I'm loyal to all of you. Everybody watches this channel. Like, we're likely friends. We're likely friends. I don't know how common it is with most YouTube, but I feel like we're likely friends with most people in this chat box. Yeah, I'm doing a fax machine analysis, and it's doing my freaking head in, Mango. What you like? You don't make sense. I don't make sense. It doesn't make sense. That's now there, and you're on. This should work, but it didn't work because I don't know what I'm doing. Maybe I need to sign into something and re-log in and check something, whatever. I'll get back to that. Hey, good timeouts there. Punish it. Michael, I can't punish it. I love it. I love it too much. I shouldn't. And it's only if it's very loyal, right? It's very loyal. It doesn't matter what mistakes it makes. I'll help it and enlist the greatest minds to help me as well. Right, so I'm actually in a good mood, but then I did spend all morning and all weekend pulling swords out of my back from somebody who had spent literally more time coaching than any one individual for a long time, perfectly aware for 2 months that he'd been scheming to try and bring me down and colluding with people who really try to ruin my life, who've tried to make my dad's physical and mental health worse, knowing he's got a brain tumor and is terminally ill. They've gone out of their way to make his life difficult. This person who I coached for so long, with Rocky for a year possibly, went out of their way to collude with those people. It's disgraceful, right? It's disgraceful. This happens on YouTube. It's fucking real. Anyway, he associates with them. has been doing for months and months and trying that. And anyways, plans were all exposed. But I was with Rocky deciding that, look, the way to handle this is to kill these people with kindness, like put more into helping them and show them that what they're doing is so wrong that they'll, if there isn't a hell, one will be created for them. Yet they still go on ahead and do it. And then they try to take some of you with them. And some people follow them. And honest to God, you think it's a lifeboat, right? It's a fucking suicide vest and he's strapping it to all he is. It's disgusting. It's disgusting. You know what I mean? If I was about the YouTube stats, this would not be how I do things. You know, yet those knobs think that this is like somewhere to, you know, oh, fuck. People, man. I swear to God, I swear to God. And a lot of it comes from my loyalty to GME and their inability to understand, right, that just because this has been happening, that's a big part of these knobs, right? Big part of what affected them is their emotions and reactions to one particular ticker, which they themselves were completely invested in. They can't handle it, eh? It's like, man, what would you have done if it wasn't for all these months of work and help I put into you? You total shit the bed. Anyway, these people, they don't understand, right? You're only just coming back to the 200 period moving average on the 3-day time frame, having put in a bull flag in a fucking parabolic move. And that parabolic move did not retrace 80%, which is what nearly all of them do. Never mind 90%, which is what the vast majority of them do. In fact, it held important levels and is putting in a bullish accumulation formation. And if it does go to the top side, which has a better chance of doing than fucking collapsing in nothing, is ridiculous. Anyway, this thing could be extended down to lower levels and still potentially work to the top side and that. And this is the point I'm trying to make at the minute. This is a really, this is not like, I mean, there's loads of levels on here at the minute. And up here, it's quite clean, right? And you know, they're all real. And the numbers show up on the right to like where those come in at, right? You can see them. Right, like there's the 4618. That's a stupid price. There's 3.618. That's a stupid price, right? These are all multiple tens of thousands of dollars per share, and this is all reaction from this previous price action, and that's what potentially happens, right? Because if a parabolic move doesn't come back 80%, right, it's going to fucking go mental. L. Baker Matthews, times just because you're in you're so awesome, your hard work is appreciated. Thanks, L. Baker Matthews. You're so freaking awesome. It was you I was speaking to in the course Discord and trying to chat about things or yourselves. I mean, I wasn't speaking to you because you weren't there at the time, but I was chatting about it. And then didn't fucking, it all kicked off around then. It's like, hey, there's a bee. So, yo, but not them. Just because your rock is awesome. Thanks so much. Why are you not printing? That's a really good one I've printed. I'm done something. I'm gone done something. Tradespotting. Anyway, I'll fix that at some point. Still send those fax requests, folks. I get them over here, right? Minute became a member. This is last night and did other things. Right? No, that's ages ago because I was trying to scroll up stuff. That was L. Baker Matthews, Natural Friend DWAC, Natural Friend 49 Super Chat, Kitties Never Die, LRC, and then Moped Monkey became a member 14 hours ago was the anniversary. Yeah. I see also a couple other fantastic people in their anniversaries. Thanks, folks. So thanks so much, you know. Thanks so much. I'm not even going to bother, right? Because, like, right. But loyalty, so thanks so much, you know. And see, like, because there's this thing you do on YouTube where you can set it so that people get every month they can put in a message if they've been a member, and it tells you how long they've been a member and whatever. And it's like some of them are 11 coming up for 12 months, and that's incredible, right? It's incredible. And thanks so much. It's amazing to be doing this stuff and have this opportunity is amazing, right? It's just because I've got such high ambitions for like the group of people, and I can't obviously control everyone's destiny, that it's like sometimes I'm like, man, you know, every step back it's like, you know, I worked so hard for that one forward, like. But, you know, right, so, and that's why it's so amazing. Those three requests there, L. Baker Matthews, Kitties Never Die, and It's a Natural Friend. Frickin' incredible, right? So what was the first one that came in? It was LRC, right? Oh, no, I didn't really say this here, right? So this is a bull flag formation. Likely the moves off this thing are ridiculous, right? Now, this has already gone incredibly volatile, and by the time it does explode, it won't just be us trading it, right? There'll be all sorts of different investment banks and people trading it. And it's because they can all see this, right? It's not just me. And hopefully I've told enough people about it by now. This is one of them, right? That's just one of them, and that'll just take you to this Fibonacci extension. You could go beyond that anyway. You might make it 60% of that move. And let's try and reach back into hello reasonable land, right? I'll take 60%, right? Okay, I'll just take 60%. And what does that take you to? Somewhere around there, like $1.5 grand. Like the 1618 is about $1,000. So we just call it $1,000 for now, right? For now, right? Everything's cool, everything's fine, and we'll probably get $1,000 for that's quite good, right? They're probably up there. That'd be crazy. But Tradespotting, you know how much that makes a company's worth. There's not enough money in the world. Oh my God, honestly, like, it's actually hilarious. It is hilarious. So, and yeah, so it's fantastic, right? It's fantastic. And then we got a request for the LRC, Occasions Never Die. I'm pretty sure that was what came first. That's not like that's what you like, make it. There is loop ring. Hit that like button if you like the loop wings. Oh, top side of that formation. That's positive. I don't actually know what this is, if it's going to work on the free day or whatever anyway, or why that would be there. I think I remember looking at this though. It's coming back to me now. Coming back to me, it's the top side of that. It's below the 200 period moving average. This time frame is this 3 day. We'll start up on the weekly, right? Get a clear picture of what's going on. So it's Tradespotting, can't remember anything. Oh yes, right. This is the channel. This is the channel. This is the channel. It's like the Tezos channel. This is what it is. Give me my parallel channel, man. Yeah, this is this, right? It's a parallel channel. It's like Tezos. You want the price action to, like, maybe you've actually broken out the bottom of it, but you're in another channel. Yeah, that's what this is, right? This is good. What do I not want on here? Thank you. Thank you. This will do, right? And then various horizontals. We've got Fibonacci extensions. This most recent one will delete it because we don't need it. We'll take that again off because we're going to make a point with it. And that's the only one left. It's easy to do this, right? So the Fibonacci will help us. Pardon moi. The ultimate low to the all-time high, that's a good one to use, isn't it? Right, that's a good one. And then that come in around 4.5, yes. So we fell below this 236. That was an important area for resistance. It was also, support. It was also the basis line of this upward sloping channel, which again, it wasn't real because we'd only had 2 touches in the bottom at this stage. I mean, the basis line might have been a channel of itself, but you'd fallen out of it quite comprehensively and then hadn't put anything significant when you went through it the previous occasion. So I'd be saying that this is a basis line of a potential channel that you would have identified already. And then here you come in, you get a little bit of a touch at the bottom side of that. Now, you could probably make that even more accurate. But what's the point? Anyway, outside of it, came back up, tested this horizontal level. You can see where the body closes. That was your maximum. You got above it on a wick and then back down again, broke through what might be the upward sloping demand line. But then, Rick, this is a channel on the weekly time frame that we're talking about to illustrate the overall trend that this thing's been in since it began. You can adjust it just like that and it's already accurate. And there you're testing the bottom side of that channel. Price action moved outside of it for 1 week and closed. It didn't open outside of it. It potentially moved outside of it and closed. And now you've got a subsequent open outside of it, which hasn't yet closed. I mean, price action's down 2%, so a little bit of a dip there. It is outside of an important line on the weekly time frame. And there's other dynamics that we'll check in with after we look at this quickly, because we've got other ones to do there on the request, but then it's also important to look at it. We'll look at Bitcoin dominance and a Bitcoin chart and talk about where that implications will be for price action, looking at that, and also maybe total and total too. Hi, Observe Thyself. Hi, L. Baker Matthews. Hi, Bulldog. Hi, Stally Bala, a legend. Hi, Observe Thyself again. Hi, Observe Thyself again. Hi, Homer Ghost. Hi, Baldy Buchanan again. Hi, KT. How are you doing? What did you say there? Karoki, Crop, and Tradespotting are aspirational and inspirational. They are not ambitious. That's for fannies. It's aspirational. True. Aspirational. I suppose, other people would describe it as ambitious. A lot of people, we are very eager to help everybody do well. Does TA work better off a log chart? Love your integrity. Fine, a good question there. Does TA work better off a log chart? Some TA does. Some TA works better off a linear chart. For example, harmonics are much better done on a linear chart, just because that's where he came up with them. Scott Carney came up with them, used, and all the statistics and probabilities are based on and the outcomes from trading there you'd be using to develop an edge, and that they're all based on linear chart. So in that instance, perhaps linear. But I do my TA on a log chart for two reasons. One of which is I find that it's more informative to, and now I'm interrupting the fact request to answer this question, but I find that it's more informative to do my technical analysis when the geometry of price action is defined in percentage terms, which is what the log chart provides. And I also think that when you're trading, if you're a serious trader, you won't be trading in dollars or some other, you're not committing in any one trade a number of dollars. You're committing a percentage of your account size. And when you're measuring your success over a period of time, the way you normalize and amortize in order to analyze your own performance is that everything is a percentage, and rather than a dollar return or expenditure. And so that allows you to do much better orientation and organization of your own sequence and behavior of trading in order to exploit it for its own potential benefits. So for example, if you get 8 of these particular type of trades in a row and they generate this type of percentage, but then you take this particular type of action in that sequence and that causes this type of effect to your overall potential outcome and then the overall percentage. You analyze your own behavior, and all these things are stuff that's like you get into deep in the next stage of the course, or the last stage of the course. There is the risk and reward section. It's about the ways in which you manage your own performance against the overall success rate of the strategies you use, and that's overall success rate against the market at large. And how all of that is encompassed within your own risk tolerance strategy that wraps around everything. And then the way in which you analyze that and work on those dynamics, which will pull up the overall performance, like how you cut out this is this thing that I do, which is like this, and it happens at this stage of my trading, and I can identify it from my trading journal, and I never would have known that it was a problem, because in itself it's good, but the subsequent 3 trades I take after having made these sort of decisions have this long-term implication for the percentage return of what was my current overall strategy that encompassed all of these little bits, and how does my personality interact with these changes, and so there's multiple dynamics, there's multiple variables, everything depends on each other, and how do you handle kind of a monster? How do you take that from this wild beast that lives somewhere in your house and scares you when you go to sleep because it might fucking liquidate you, to this is my strategy and I make it work. I make it work over time. I wrestle it. I tame it. And then I take it for a walk and it scares the fuck out of everybody else's dog, right? That. You need to understand a lot of different things about what it is to be a trader. If you're still using dollar returns and so that's why I think and that's best represented in percentage returns, and you're only going to see that on a logarithmic chart. So that's a tip, man. That's a really good way to think about it. There are people who insist on using linear charts, like Scott Carney, he came up with an amazing strategy into loads of different useful aspects of technical analysis, standing on the shoulders of giants and adding to this body of knowledge. He's done an amazing job. He did it on a linear chart. I'm not saying he should have done it on a log chart, because I'm not saying, that's not what I'm saying. He did a fantastic job. I'm saying I wouldn't have done it that way, right? But he's done it and it's fantastic. So yeah, I prefer log charts, but everybody can set up to what they want. I mean, look, for example, this is the thing, right? I'll go back to that in a second, but just because everybody understands this, and I've seen this I've showed this a few times, tried to say this at the start, but if you're looking at GME and that's what you're trading, right? That's what you're holding, right? You're going to be so depressed at this point. When it came back to here, you're like, sure, it's only like a breath away, right? It's come all the way. It's only a breath away, but that's 17, that's 51. That's a fuckload different, right? But there, it looks really similar. And then up here, this looks like no different at all, but it's nearly twice as much again, right? And then up here, you're like, well, this is awful. It's actually more, and that's as a percentage, it's huge, but it's all hidden in this linear, right? Whereas you do that, You can see what's actually going on. You know, these were the lows, right? And this is nothing like it, right? You're nowhere near back, right? Nowhere near back at these. Like, anyway, so this is what I think. And if you don't see that there's these differences, if you don't, you know, a lot of people don't notice that it's different. It's different for trend. It's different for the previous price action. Like, all of this is different, and this has implications for over here, and you can't see any of that on the linear chart. I mean, well, you would just ignore this, right? You would ignore that. There's no way you'd be like, well, I can see that there's this potential inflection here. There's no way you would notice any of this and look at that coming in and look at the way this intersects with these different levels, and then, like, but you wouldn't, right? Because you'd have it on that, and you'd be like, well, what's the equivalent? That is totally useless, right? That's useless. So, you know, there's lots of different ways of looking at it. Right, so we're back at LRC, right? We're looking at LRC, USDT, and I probably could give you a better answer than that. Now that you've asked me in that way, I could actually probably make a good clip about why why I would suggest one or the other. Or maybe there's something in there that could be made into one. I don't know. Anyway, I'm actually exhausted as well, so I could actually be talking complete nonsense, and I have to review what I'm saying in some instances when I'm like this. Anyway, I've had a lot of coffee, so actually brilliant. And then we're going on a log chart, because that's what we were at here. And again, you see now you've got this channel, whereas that's a very far away, different kind of thing. Whereas this is what price action is right within this. Or is it? It's just out of it. We're on the weekly. Right, cool. We didn't make it down very far here. We made the point, though, we don't have a 200 period moving average on the weekly time frame on LRC USDT yet. You do have a Fibonacci that describes price actions on entirety and doesn't leave things too complicated, with a 236 coming out 1.7, a golden pocket coming in at 0.34. That was our most recent low, and this ahead of our move to the top side, which put in our all-time high up at that 1.7. Price action then formed this channel on the downside. You've broken out of it on the weekly time frame. You're pushing back towards your previous low here in the trend at 0.66. Not there yet, might not get there. And the oscillators here show you that you've failed to break above the center line on this most recent oscillation that petered out when you retested that 236 or thereabouts. And you've lost your own moving average. You're also at the low end there on stochastics, so there's a potential idea of a cross, as you do have a positive slope, and that is high or low, so that's okay. But all of that's happening as you flip below the 50 simple, and when you don't have the 200, that's what I'd go as a qualifier with. So down to the 3-day, there you're below that 50 simple, you're outside this downward sloping channel. You've had a close outside of it and then an open, but not an body close, body close. See how price action reacts at this point. You do have a higher low on your oscillator. Price action did touch a little bit lower, so there's a hint of bullishness. You can see that there's a positive cross on the MACD, but that is immediately undone, though you do have now again a positive slope on the stochastics there. I like to see that, and probably continues throughout these time frames. 3-day also got that. You do have bullish divergence here, do you? Is that a lower low? No. Equal, perhaps class B. You now also have a 200 period moving average. Price action's above it, and you're potentially getting across on the MACD. Let's see how this works out. It might take a while to go through here, which is a while in a 3-day time frame. Could be anything up to 9 days or 2 weeks, but we'll see how this works out over that time period, because it could be, you know, imminent. There's a potential cross coming through here on the MACD. It's below the center line on the oscillator as price action's moving above the 200 period moving average on the 3-day time frame, and you've got class B bullish divergence on the RSI. You could also potentially on these time frames have bullish engulfing candles should you make it to the top level of resistance above it, 0.9. So there's like both at a low that is dangerous if price action goes below, but the oscillations to the top side, meaty percentage moves just to test the breakdown area. And that's so much value in trading that. There's also shitloads of value in trading a confirmed range ahead of any breakouts. And then there's so much more even than that in trading the trend. So that's like various little, and then so how do you make the most of those things? Well, you could potentially open a swing trade at these lows. You know, that might be what you're looking for, in which case you'd be going heavily on momentum indicators. You'd also be basing it on like overall formations and whatnot. And as you can see, this is in the channel. You could even draw it as a pitchfork. And I've seen, you know, some people put in a lot of effort to learn things, and you can see that they're doing it, and they themselves, like, and this isn't speaking about anyone in particular, but you can see they themselves aren't like, I'm amazing. But you can see that they're making progress, really good progress. And then they'll pull something up, like any particular type of charting tool, and you'll see them use it, and you'll think, yeah, nice one, they're using it. And you don't spend too much time talking about that particular thing, because maybe it's not like most people aren't looking at it, or it's not, and you see that person using it, and they get better and better at it, and they think like, wow, discovered something here. And then maybe they get knocked off using it because a couple of their decisions don't seem to fit with how they understand that, and they move on, they look at other things, and they build up a different kind of strategy. And then they come back to using that same tool again later on. They're like, hey, I think about this different. Like, look at this. And if I combine these qualifiers from these others, and I took it like this, and now this is starting to look really good in that. And people, like, I've seen people draw things on these charts, on this and other charts in Rocky's Discord there, pulling up stuff from what they did before and whatnot, and like putting their TA from before in and that. And you're like, yes, man, that's amazing. Anyway, so this thing, right, you could easily draw it as a channel, right? You could draw it as a GAN fan, and you could draw it as a pitchfork, and all of those, there's two different types. And anyway, so there's three, but there's two that are good. And so anyway, right, there's loads of different ways that you could look at this thing, and a lot of good TA would suggest that these are like a potential areas for moves that might result in big percentage returns, can be managed quite easily in terms of the downside, where you wouldn't be able to manage it with a stop loss. And there's a number of different stop loss strategies, right? And we can talk about those. And then you can also use stop losses to manage your risk to the top side as you go into profit, and you can do the same with leverage and whatnot. And I could help you do that too, to talk about that and that. So we're all doing all that stuff too. We're talking about all that stuff anyway in the Discord and on the course and whatnot. But we can talk about bits of that here too if you've got questions about it. So that's an opportunity, and there's loads of different TA at the minute that speaks to potential opportunities on this, right? But there's also danger, huge danger, but that's like overall for price action, not for you as a trader. You can limit that danger dead easily. You can even take advantage of it by putting in trade like at levels around here. If it doesn't hold like 0.62 and 4 hours, right? You can easily look at this and say maybe you'd want to be taking it to 0.3344. And I'm not saying like now, like maybe you want to manage that trade with some sort of cover when price action does make it to these highs, right? Maybe that might be how that position to the downside evolves, as opposed to you actually shorting something, right? That might be how that works. It certainly would be how mine would work, and it wouldn't be a cover on this thing either. It would be on actually something else, right? That would be a hedge against my overall crypto portfolio. Anyway, this isn't about me. 200 period moving average. Hold that, move to the top side in 3 day. That's good. 2 day time frame. I'm so disappointed in some people, It's incredible, right? But I'm also like so enthusiastic and positive about others, right? Anyway, so there's a flash down at 2.6, and that's like speaks perhaps to what I was talking about too, like the conflicted nature of this, right? If it does move back down, I don't really care about this overall channel. Price actions in this channel has only existed, this thing for literally it's only existed since the 11th of June 2020. So, it's not like that's the be all and end all as this potential channel. There's other ideas of price action in here. I mean, nothing to worry about on the RSI, but you could draw pictures on that. Quite obvious ones. It's like, this is also dead obvious, right? This is dead obvious, the way this thing reacts. There's like the definitive part of that formation, and then subsequently you've had something that was like very, very similar here. Especially at that part of the trend. And then, overall, what does this look like? It depends, right? It depends. Is this a channel? Is it a wedge? How does it evolve? It's very easy to draw it. I don't know why there's this other one on that. Is that because that's a linear thing on no dots? Let's just keep this here before I delete it and see. Why is that channel there? Like, why did I draw that? Must have been when price action was just here. Anyway, you caught the 200 period moving average on the 2 day. I suspect the daily you would have been in it, right? On the daily you were in it, and you recovered that on the 50 simple, and it was 200 period on the 2 day. Subsequently, you lost that area, but it's the horizontals that matter. Now these blue lines are confusing because I'm not trying to make these points on these time frames. So goodbye. And then I suppose this one's fine because it's marking demand line price action. If it does continue, the downside likely holds that. There's the horizontal. If it does break this one, then the next one's down at 0.3, and that's a big move. I mean, you could move that a little bit, but I suspect it's at Fibonacci, is it where it was? So I'll get back to them out now, actually. Why is this here? Oh, because I went back to this freaking thing to check that. Now I've moved that. I see, this is another thing. I can't move drawings between them. Here, those ones work. That's okay. Right, and also this is just distracting. So is this one. So is this one. They're all distracting. Anyway, potentially outside of that, this is also useless. So there's 200 period moving average above the 50 simple. That's negative to see that, though. They do have a positive slope. That's positive to see that, though. Price action is below both of them. That's negative to see that. So you can also see you're testing the horizontal. That's neither positive nor negative. It's an opportunity. And then below here, you can see the next one is like a good chunk off price action, right? Nearly a whole 50%. The resistance above you, like I say, 0.9. That's 50 simple period moving average, meeting this upward slope and demand line previously. Now likely supply, horizontal level. Fibonacci at the 382. You've broken below that and tested the 0.5 or close to it. That was this most recent low here. Let me get this more accurate just so I can see if this is right. That's not right. That's better. And that's better. And I can draw that in fine. And I can drop this guy on the 382 easy. Right, so there's a clear picture of where the resistance might be. This line, we don't need it. Let's move it down. There's a golden pocket at the bottom side of it. Let's just delete that. The 886, put it there. This would be really, this is a log chart too, you know, like, anyway, so I use Fibonacci's on the log scale, obviously. So unless I'm doing the harmonics, right? So when I'm doing the Fibonacci theories, yeah. So the golden pocket here, there's a 236, you're broken at that. If you do also break 382, which he did, you know, recovered but then broke again, so it's not like definitive with regards to price action at this level here with regards to the structure and looking left horizontal levels of support. That's way more relevant than the 382 in this particular instance. Below here you can see that you have got resistance at the 50% of this trend. You know, that's natural. That's why the extensions were up at these levels here. And anyway, right, that's a different conversation. So we've got a horizontal level and we've got a Fibonacci, so I'll put in that level. And then you can see below, obviously, like I was speaking, 0.3. So if you do break down from here, the next step on this particular part of the trend is at 0.52 and it could go back up. Commodity dash, boom. How do you see LR's price action performance once didn't see the right hand side of that, where is it? How do you see LRC's price action performance once the GME marketplace launches? Don't all trades on the marketplace have to be on LRC? The GME marketplace uses LRC. Yes, it uses loop rings layer 2 to wrap the assets. Layer 1 and layer 2 is the way it works. And then you, because it's loop ring, and then anything you want to sell on that marketplace will be transacted in LRC. So you need LRC to buy it. That'll have various implications, you know, in that it becomes a transactable currency there for those sort of purposes. And it gets that sort of business use case that like outstrips its reason to perhaps be traded, which won't be happening yet. And that even in the launch of the GME marketplace, that won't, because it'll bring in new people to trade it as well. So there's those implications. So you know, it's never going to be taken out of the arena of something that will be used as traders. It's like may eventually become something that has like as much of a valid transactional overhead via that business purpose as it does via trading, which would be a positive achievement for any cryptocurrency. But there's obviously then the holders of LRC at the minute aren't just yourself and I and other people like Joe and shitloads of GME holders, but there are also people who develop the project, who remuneration. There'll be partnerships, there'll be other things that they do. Like, for example, when they LRC have their deal, like, so a clear one was the IMX deal with GME, in that the IMX deal that they did with GME had a fundamental depressing effect on its price, you know, and it was like they were giving it away in order for like a business, right? So like this was an opportunity that would have had future value and obviously is going to pay off mutually beneficial for both parties, but that doesn't exclude the possibility that it's going to have a negative effect in the short term for one of them. And it was quite obviously going to be IMX for the way that, you know, the means of the remuneration to GME and their side of the deal, and like that. So it led to distribution, liquidation of the asset, and then had a negative effect on the price. And that's like, those are always potential outcomes when you're dealing with a cryptocurrency. Like, what is the use case of this cryptocurrency? And so it's in the long-term interest of it to have a much greater distribution than it currently does, and to especially those concentrated holdings to be diluted. And that would be negative for price action short term. There's a little bit of pain to distribution often in these things. So I expect that the event psychology, which would drive price action in the lead up to the GME marketplace and the accumulation of LRC with lots of different people, will also be an opportunity that is exploited by the people who run the business for its own long-term good to increase the level of distribution of LRC shares, and rather than just restrict their own supply to the marketplace or whatever. Also, they'll have vesting schedules and so on, and like the liquidity and the amount of LRC that'll be hitting it. So that's that aspect to it. Also, what you have to consider is like unique to the fact that this particular business purpose, and like then I suppose applies across the board to all cryptocurrencies when they get a business proposition, is that the people that are then able to use that cryptocurrency to buy their butter, their bread and their milk aren't using LRC to get those things. You know, they create the artwork, they put the effort into the projects, they're doing whatever it is with their business, and it may well be that you pay LRC to use the get the product off the, and you've had it right for whatever reason because you believe in LRC, for example, but this person you're giving it to, they're exchanging it then again subsequently, and that'll add liquidity on two occasions, you getting rid of it, them getting rid of it, and then who they selling it to, right? And like a lot of this is speculative value. A lot of it's driven by traders, like I say, until that's overcome with a business use case. And then it's only at that point when the inflection changes, when you start looking to the statistics and say, well, these are like a measure of value, like the transactional volume itself is a measure of value, and you might have like a unique customer way of value in that interaction, like either it's a customer lifetime model or some other customer relationship mechanism that you're using to value customers. Well, anyway, right, this is different in a lot of people, different pens, right? But a lot of cryptocurrencies are run similar to public companies, and as such, they're expected to, you know, have ratios that will somehow speak to their ability to achieve their business objectives and whatnot. And so, you know, anyway, like it's a positive situation, but it might lead to increased liquidity, and so there'll be multiple applications, multiple considerations with regards to price action. But I think the question is, if LRC goes to the top side, where's the next place to be looking to? Right? That might be the enthusiasm that we're hoping for. And in which case, I'd say like there's three areas that jump out at you that you would be able to identify in the first instance. Some of which you could say like, well, how far is this? How robust is that previous strategy, right? And there's this one here. Your previous high exceeded the 1618. The next high in this trend was at the 2618, and then the ultimate trend got really close to the 3618. And I could perhaps draw that slightly more accurately, and maybe they'd be exactly on there, right? So this is a good idea, right? Aiming up for around 4.5, 4.6. You know, that's not crazy, but that's not even everything, right? There was your next oscillation within a formation which is still intact, and as such, the 1618, that was up at 2.6, which is obviously a lot more where we are at the minute. The 2618 is at 12 point something, and then if you're talking about these sort of extensions, which you made it to, right? You made it to the 2618 and the 3618 of that previous oscillation. The 2618 and the 3618 is up at $70. The 2618 is up at 12, right? And you know, there's so many implications and dynamics and considerations. So it's not just the fact that, hey, this is great news, right? Or, well, then actually, well, that does mean that a lot of people are going to be liquidating their holdings in order to, you know, facilitate their own lives. That's why this business purpose exists. And that maybe have a dampening effect on price. And then it's like, yeah, but a lot of this whole thing is about just reaching larger accounts who are aware of its potential in the future, who'll then just buy and hold thinking it's going to go 100x, like huge accounts who buy big chunks of various cryptocurrencies, or any of the money managers in the crypto markets that are interested in holding and accumulating these sort of things. The more credibility it gets, the more likely you attract them in, and they come in with big wads of cash, and they have an effect when they buy, and they don't really mind too much. In fact, some of them are aware of the fact that they're buying and it's affecting prices. And like in cryptocurrency, like there's very little to stop that. So whether you agree with the ethics of it or not. And here's the high and here's the low on this particular part so far. 1, 2, 3, you know, price action going a little bit of a rectangle at this stage. This speaks to the fact that if it does bounce from here, it could be potentially positive. 200 period moving average making it back above a 382 to 236 at this stage would be, again, like we talked about, these targets at 0.9. You got to break above that to start getting bullish again. In particular, 1.5 to be very bullish. You get to the golden pocket and the basis line around before you hit 3. After that point, you break the 886 as you go through the basis line. I think the next time you touch 3.4 and open and close a daily candle above 3.4, maybe in the next day, you could move to 14, right? These huge moves could happen really quick. That's possible. I'm not saying it's likely. I'm saying it's possible. And you want to obviously pay attention at the time. And the place to be entering for those sort of moves wouldn't be at 3.5. It would be managing your risk here, where the low comes in, where the next one is. These are the cheap places where not only is it cheaper as an asset, you know, the risk management level means your stock can be closer, which is cheaper overall. And that distance that you're covering at these places to reach stops, right, that's not so drastic on price action here. Whereas down here, you know, you're thinking like 0.9, oh, well, the next one, it's only that little bit down to like what 0.1. That's another 50 fucking percent, right? That doesn't happen up here. And so this is like, this is the opportunity, this zone here. And then you'd follow it with stops and profit. Like, and it might be the next one, it might be, anyway, but these are the opportunities, right? And so I would think so, because I like a lot of chocolate on my biscuit. You know, there are people who are shorting these sort of things from here, because like, whatever, right, fine. But then you'd be aiming back up to top side, the basis line. You'd be following it with stops. You've got take profit targets if you've put a lot on the table, if you're on leverage and you want to manage the position itself and that and whatever. And there's loads of opportunities, right? And if you're managing your overall portfolio, capital efficiency equals capital formulation. You want to get rich, don't you? So you likely would. But there's loads of different ways of managing it, and it's not to say the price isn't going to go down. If it does, it could easily go down to 0.1, 0.11. Before that, you've got 0.33, and then at this side of the trend, you've got people be looking to hopefully get a bullish entry at 0.53, depending on the overall market. But then I think a lot of people already bought this at 0.67, 0.64, whatever it got to down there. What was it? 0.6. That was previously down here at 0.64. I got some, but this one didn't reach it that time, so it was close to it, but whatever. Anyway, I got rid of the stuff. So this is the way I trade this thing. So here's this 0.68. So, I mean, like, if it doesn't hold that, I've spoken about those levels, and these are the top side targets. 14 would be like, you know, a good target for a long-term hold on LRC, and you'd probably be hoping for more of the same with its regard to its previous behavior. You see that continue, would take you around 14. Ahead of that, you got the basis line at 4 point some, 3.4. Is it already back? Anyway, the golden pocket 2.1. That's up more than a significant percentage. And where's the chat box? I wasn't at the top of it. Oh my goodness! I wasn't at the top of chat box. So I don't know if people are staying there for it. So that's the LRC. I think I've spent flipping ages on it. So, where did we even get to? What else was I was going to look at. BTC, USDT. No, I was going to look at the dominance. Whoops. Did I even get the right one there? Price action, push back above that horizontal. Like, see, this is the, you know, overall crypto markets could recover to a degree, but is the money that's coming in going to Bitcoin, or is it going to the alt markets? And you can see that this is a potential line for price action to target. Golden pocket retracement. It's gone above this previous horizontal. If the money does come into the market, is it just going to Bitcoin? This is the resistance level you need to aim for. It's a downward sloping trend at the minute. That's the supply line on the top side. You've also got lower lows on price action. So, you know, that would likely form some level of resistance. The golden pocket in advance of it on this particular Fibonacci is around 43.8, and you're at 42 now. So that's good. You know, you've held 40 here, which was one of the important thing. If you manage to break above there, around 40, if you get back above 44, that's very significant. You know, you can see looking left is significant on this part of the trend, but you've got this other horizontal to meet around 45%. The truth, though, is, you know, that's price action responds quite violently when it breaks the downward sloping supply lines. So we'll see how this one goes, but that was your head and shoulders, which was a nightmare. Managed to trace the bottom side of that subsequently, and then you've got bullish divergence on this low. Right, so this might come back up again. I don't see it breaking 50% in the medium term, but we'll have a look. And what about Bitcoin itself? $38.8. So it's just this trend, you know, you're only really at the top side of this thing here. It was positive that we managed to bounce from these areas. There was a touch of bullish divergence on the daily time frame, back above an important horizontal when it was back above 38.1. Reaching up to 39, that's interesting. 50 simple coming in at 42. You've got really important levels, though. You'd need to be breaking at 41 beforehand. I don't think it's going to do that with a quick look at it, but I could easily see it testing there just to scare the shit out of people. Golden pocket retracement, it's not even going to make it there. Like, the horizontal was here, advanced, so the rest that you can look at this and see that's the pivot point within the trend. You can see this formation. This is fucking obvious, right? And this is, right, anyway, right, pardon my language. So Bitcoin's going to go up. The dominance things might touch up a little bit. Bitcoin dominance maybe back up, right? We touched, it only could go all the way at 50, but you know, you can see at 44, that would likely happen if Bitcoin went back itself to this 50 simple period moving average. You know, that's like the pivot point within this part of the trend. It's the implied target from this formation, and you've got bullish divergence on that pit of the low, and there's a 236. You recover, price action gets back above 39.7, then it'll go to 40, 41. And that'll bring the Bitcoin's dominance up, and it might mean that alts that stall here for a while or drop a little bit lower, maybe they come back up and test their breakdown points but don't go further. But I would keep an eye on that sort of stuff in the meantime. That's interesting. And so that's the LRC, and it's with a little bit over context in the greater markets that's going on at the minute. And I hope that was helpful, Joe, or at least adds to your overall picture, or like, you know, reinforces your own way of looking through things. Had to before I left Bun Bike. Yo, Homer left. Oh no, great. Thanks for being here, Homer, gentlemen. Komodo Dush, $5. Does tell you work better off a log chart? We answered that was both from Komodo Dush. Very generous. No, wait a minute. That was before about the LRC. Yes, and that was from Joe before about the LRC. Thanks. Komodo Dush, cheers. Super. And then El Perro, just for being awesome. Thanks. Just thanks very much. Natural Friend, 499. Cheers. DWAC, that was it. We're going to do that. Yes, DWAC. And then what was the other one? Good morning, GME and friends. See? Good morning, GME and friends. What a lovely message from Natural. Can you go along and look at NGD? You betcha, buddy. I can. To put that clip out there this morning, but of course we looked at it on Friday, so I'll update that definitely. And Kitty's Never Died Before said, can you take a look at Ape and LRC? Sugar, I missed Ape. Quick look at Ape. What are you doing? 16? What's that? 15.3, lost 16. That's not great news for it. There's obviously potential lines that it could go to on that front. I've not had a look at this on these charts anyway. I'm not interested in that really. That low, that's what I was talking about. You know, I was talking about the low, not the coin. Also, I'm interested in the coin for other reasons, but whatever. I mean, it's great to trade it. I don't give a shit about the thing in any other sense. There are coins I give a shit about. I'm not saying that, but not on this one. So, and then, but we're not here to give a shit, are we? We're here to make money. So there's that 886, and then I'm not saying here this channel. I'm saying look at these charts, but like also the same thing. So there's 1.6 money, interesting, and I think I'll get there for, you know, like this thing probably at some point next wee while, not necessarily. So that was this ultimate high which we've tested. It's not been around long, obviously. You can tell, like, this was a month ago, 17th of March 2022, and we're on the daily time frame, so we're only getting so much, and moving averages are on, right? It's just none of them are showing up yet. I can even probably turn on an 8. Did I get an 8? Yes. Don't want any others. And you're below that, right, on the daily time frame, which is negative, strongly negative to be below it, strongly positive above it. You haven't really put in significant markers of it as following the trend here yet, like you did on that previous move and you did on this previous low, and then here there was flux as you would expect because it isn't demonstrating strong trend. Anyway, you're below it and potentially demonstrating the start of a trend when you've been rejected from the retest. And at that stage, you also fell below the golden pocket on this Fibonacci and came back down. This is a long chart. Good, I've double checked that all the time. 236. Don't know if you'll make it all the way back there. You've currently touched off at 382, like the 50% pretty quickly. That was also a horizontal level. You could have expected to find some lot of resistance there, or at least had you found some, you would have had implications for it. And there being none at all also has implications. You come left and you came back to this previous horizontal level. That was your test. It's also the 382 Fibonacci. If you break that, it's really bad. Also, it's bad because the horizontals here are not going to hold. Like, you're already going to go straight below them at the same time. This isn't a particular important one, right? This was the high of the formation before, and this was the breakout point. So you lose the 382, you'll probably also lose the 236, or at least be coming down to test it in around 13. What? 13.9. I mean, you're already nearly there, but you're not. So there's that, and then there's a 236, which is 12.6. Those sort of levels, price action probably goes to if it feels where it is at the minute. That's on daily time frame. 4 hour to what? 4 hour time frame, 50 simple, 200 period moving average rate. Positive splay and positive slope, 8 periods, ruining that, and price action holding it below in the 4 hour time frame. So it's like strongly bullish, bearish trend at the minute. You've had your RSI lose the center line. you've had to put in a potential swing failure, lose the center line, then lose zone moving average at the same time, and then head towards the bearish control zone. You've had your MACD say no thank you, and histograms like in line with lower lows, stochastics in toilet at the minute on 4 hour. You wouldn't necessarily expect to see anything on 4 hour stochastics on ApeCoin. Right, so that was this low we took it to before. Here's the ultimate low from this part of the trend. You didn't manage to break that. Fibonacci from here would be what I'd look to then. This high within the move, or would it go from all the way up here? Well, I suppose we can take it from here if you want to see crazy moves, right? Crazy moves. I mean, I've already done it. I've already done that one, and they've already got the 1618 on it. It's up at 70, 60 odd bucks, right? So that's your crazy move. Takes you, call it 58, and it would still be crazy looking this up at 33, because 100% on price action plus at the minute. Still be crazy. You're not necessarily targeting there from here, but you have come in now for a test of the 200 period moving average in 4 hour. It's also a test of this previous low looking left. Likely is a bounce area for those two reasons. If you don't get it, then your 236 below at 12.6 or something looks very tempting. See this on this time frame, 4 hour. Was I coming from a higher one down to the lower one? I should have been going the other way, possibly. Yes, possibly. 2 hour, you're in the bearish control zone on the RSI. Potential cross in the MACD looks like it's about to fail, and the stochastics say that you've not actually, looks like you've got a positive slope, but you've not actually made it out of this area yet, and previously had a failure there. Could easily just put in that sort of thing again. Very similar. This not so. That's a potential inverted head and shoulders at this side of the trend. It could have broken to the top side after that, but you failed. Lost the center line in bearish control zone. So that's difficult. Below the 200 period moving average on a tour, that's difficult. So things bearish, but not talking about the future. More like you've had a cross on the 1 hour there. I don't know if this would. I wouldn't consider that a test of any of this. The price action did have a little bit of resistance at the 200 period moving average, and that is this horizontal level at 19. And it'll be difficult if price action gets back there again to make it past it on the first pass. It's also a horizontal level there, support and resistance previously. So 1, 2, 3 is a real level that at 19 would be difficult to get above 19.5. The 200 period moving average is below it. The 50 simple is below it. It's a def cross. You might have a potential test of that area. Let's speak to push to the top side, but you're below the 8 period moving average at the minute. If you recapture that, open and close above it, then possibly you do move up to 17.7, but I don't see that now. I see a downtrend, potential bullish divergence. So 1, 2, 3 touches, 1, 2, 3 touches. Here, this is the place where it could turn around. I mean, it could. 1, 2, 3 within these lows. Higher lows on the oscillator, lower lows on price action, making it out of the bearish control zone. 1 hour time frame, that's significant. If you can push to the center line here, you will then start to come up to this over the head and then meet that 50 simple. That would be another oscillation to the top side, likely a lower high at that stage. See how the RSI looks. It's already had 1, 2, 3 touches with continuation divergence pushing it down. 1, 2, 3 touches. Catching it here, looking left horizontal at 13.6. You know, I could see it pushing down once more and testing that level. If you're still to get a positive reaction from this bullish formation at the minute, it's also a downward like broadening wedge here. So we'll see. Top side 19, bottom side 12.5 short term. I'd expect it to be a little bit tighter than that. 382 Fibonacci here coming in at 14.7. Maybe that'd be where you bounced if you dropped a wee chunk at the minute. Although you're in this formation, and you could easily come along and test the top side of that. You could draw that differently, but something like that. And then, you know, no, not 19 here. Then you'd probably be targeting something within the range and within this formation. And like in terms of percentage move, that's nifty. If you get a further low, then that would be the place to take profit. And overall, like, there's a lot more going on with 8. But I don't know, right? That'd be what I'd be looking for. Smaller moves in these parts, right? But you're going back to the overall context of crypto market as a whole at the minute and saying, well, there's lots of different places to put your money. If you are to pick a cryptocurrency, though some will be doing better than others, and some of them are at slightly better inflection points for your own trading, though this is good opportunities too in different ways and different term frames. So that's ApeCoin. Briefly look at that to add to that. Thanks, Joe. What else was there? That was it. And then DWAC. What have they been doing? What's the day? This will be interesting. So down 7.29. We knew there was a little bit of a percentage return to the you know, we kind of spoke about how it would be healthy. Oh, look, we've got a circle and everything. And we've come back and filled that gap. You know, right? So, I mean, I don't like, don't get me confused, right? I'm excited about this because the TA is particularly good, right? I actually have a totally apolitical opinion on this and that. And if it makes people money, then I'm positive about it. And that's all there is to it. So 66.79, that's the target. It's the flash. It's the golden pocket. It still looks perfectly achievable. We wanted some sort of a retracement within this move, right? So that we could suggest that you go there and you can manage with a stop on the way and you don't need to take profit necessarily if you haven't done already in different areas. And you went through the brain area to take profit once already, and that was at 51.67. Price action, sure, it's below there at the minute. That's not the point. I'm not saying like add to a position, like compound one trade within itself and it's moved to the top side. No, that would be crazy. I'd take like, you know, the entry I want when out anyway, right? I don't like, no, that's not how I do it, right? So, you know, you'd hedge if you wanted to do it that way and you managed it for the delta and all. Anyway, I don't know, I'm getting cut. I don't even know if people understand what I'm talking about. Silly you to waste points. So there's a gap, right? And you want price action to come back and fill that area. It did so. There's on the daily time frame, we spoke about how the gap was there and how it would probably get filled pretty darn pronto, maybe in the first couple hours of price action. And it has done in the first couple hours of price action. Congratulations. Back down there. Is that the gap there? Can we see it on the daily? Nope, we can't see it on daily. I mean, maybe, I don't know, right? We've got price action since, is that the 4 hours? Is that where it is? Where is it obvious? Is this it? I don't even know if that is a gap at this stage. Anyway, it looked like it might be a good area to retest. Price action did it. It goes, exceeds it. That's not the end of the world. Let's measure these Fibonacci's and see where might be a natural. Oh, Tradespotting. Am I even clipping things? Shit, I just made a clip for ages and then didn't stop. This is going to make me do loads more editing work. I am a tube. Here we are with DWAC, Natural Friend, sending a fax request. And we've been looking at it. It's quite interesting, the price action here. Come back into this area, fill this gap. There it is there. We can see it now. At the low side of it, 48.04. Not completely filled it yet. So, you know, or have we, right? I don't think we have. Anyway, it's not exactly panic stations yet. There's a gap and it's the bottom side of it. And that's where we'll be looking to go. Over and above that, there might be a little bit of a further retracement. We'll see where the 236 comes in at from the low side of this particular inflection. 236 is right where we are at the minute. Again, closing that gap, that's where you'd be aiming for. I know you've got another 236 of a different fib, which is quite dominant just below, but this would be another area for a bounce. This one right now, pretty much, with a little bit off now. Tiny wee bit more, and that's like an entry. But you tested 236 with a bullish move. Your price action holding the center line at that 236. You potentially got us coming in here for like a failed cross to the downside with the histograms very healthy, and then your stochastics in this top side here, are they turning around right on daily time frame? You know, that's a little bit lower. You have turned around here before. What about on the weekly? Go back to the lower time frames in a minute, but you've got a positive inflection to the top side and then test of your own stochastic lines there. Hey, might be good, right? Might be. I mean, it's already been good, and that's kind of why it looks good. We'll see how it continues. There's very little you can get from the MACD. You've only got the signal line on the weekly, and then on the RSI, you've only got ARG below the center line. That's not great. Potential inverted head and shoulders. Zero moving average above you. Price action would test like above that within this implied move previously up to it's like 58, maybe 60. You expect RSI to trace back to 60. You'd need it to get up to the golden pocket at around $60, $69. The fact that it's at 69 and it's the golden pocket and it's come back down to these levels, and then we talked about filling that gap, and that just looks like this whole thing might play out perfectly. But then that would be me getting excited because I've said that's potential. Well, let's go back down, right? Today, this is all contained within the body of the previous candle. So despite the fact that it's negative, overall this formation isn't necessarily. And if this daily closes back up here at 49, above 49.93, having closed the gap, having tested the 8-period exponential on the 2-day time frame, come back up again. That's stupid good for the bulls there. And so you close above 49, even better 50, then you'll have like nice little Pregger's candle there, and continuation you would expect. Continuation is 69. Well, not expect, right? Because that's very arrogant. But you know, you'd be looking for like a strategy that would involve that sort of a target. So price action horizontals is what we focused on mostly here on DWAC so far, and the longer term time frames we're working back down to the smaller ones. You can see this is potentially a tweezer bottom. price action, then putting in like a Harambe candlestick pattern here, potentially having held a 236, having closed a gap, and then potentially you get continuation to the top side. Should that happen, your targets there at the minute are $69. The places to get above would be, you've already done it, it's holding them really. Daily time frame, back down here you can see, whoops, get back on your line, wherever that actually was. Anyway, that's a different 236, right? So there would be a good place to test if you don't hold this level, which you're already at 236 right now, 47 and change. If you don't hold that level, then, I mean, say right now, but actually you're a couple of centimeters away, maybe. I don't know. I'll zoom in. There's a 236, and probably the other Fibonacci at 4350. That'd be a totally positive area to test too. You'd be putting in an potential inverted head and shoulders on the charts here. I mean, we were talking about the potential on RSI and different time frames, but you know, if you've got this sort of thing, with the right shoulder here, that'd be interesting. You've got not more volume on this shoulder. You don't have more volume on the very first shoulder. You'd expect that, so you've potentially already broken it. And also the distance between the head and neckline suggests that it's a different sort of thing. You do have a tweezer bottom potentially forming here, and that's better. Price action would need to test back up above 65 there to get this continuation. You can see there's also this volatility in that. So at this stage, and the price action went through that pretty quickly, you know, so there isn't many trades within this area, despite the fact that, you know, this close, open close, is what affected price action at this stage, and then subsequently, like the next level up will be this one at 58, a 0.5 retracement, and that's where you got to pay attention at this stage. It might then exceed it, go to the golden pocket. I'd like to see that, but that'd be what to be monitoring. Dings. What did I also later say? Well, you're not long, right? The 4 hour will tell us more information. If you hold that, be interesting. Stochastics does turn around there a wee bit, but you're on the 4 hours, so I don't know if you're likely to get it. If you hold the center line, the RSI, that'd be great to see. Again, MACD will be giving you something on this. Where is it? Cross there, heading towards the center line. Not got through it yet, so we've not got the final confirmation of that trend. The fact that you've managed to persist very, very close to the center line and have a positive slope is testament to how strong price action has been recently. Holding the 236, come back down, hold the 8 exponential. You know, hold your own moving average and the center line RSI, and then you're just about to break through and get a final confirmation on that MACD in a 4 hour, but you're below the 200 period moving average, so that would be maybe perhaps the extent to where you'd look to, or a retracement to the 236. You got it already. There's the 200 period moving average. There's the golden pocket. That would be your topside target from that signal, because you're below the 200, and even then it's kind of in doubt. So that's interesting. A 4 hour, was it going up or was it going down? Was it going up or was it going down? That looks like 2 day different day. This is what I'm going to go down. I'm going to go down. Downs. We're going down. There's the flash at 65. 200 period moving average, just going through that in this time frame now. So like that will then form resistance en route. Your potential cross, still holding the center line though on 2 hour on RSI. It's a potential cross coming through in the MACD, but that could easily just not work. And then this could potentially turn around here on the stochastics. 1 hour. You're already at a low. You want to get a positive turnaround here to see price action at least attempt to go up. This would be the place to do it, those stochastics. Certainly would be. So you could at least start flattening out. This is a 1 hour time frame. You're not going to see that for a while, obviously. It just closed an hour 11 minutes ago. So 50, 84 down to 47, 76. So this has only just started since we started talking about it. It's only started making its moves, right? Is that right? 15 minutes? Yes. Well, possibly. And around there. And that gap, we talked about that. Excellent. 236, spoke about that. We're on these time frames. We can see these things slightly clearer. Go back to early just to double check down to half hour failure, continuation. And then what is that? You've hit the 50 simple and you've hit these levels. So, I mean, price action would naturally oscillate to the top side within this previous trend. At that stage, you'd be looking at the horizontal levels looking left. First one's at 49.50. That's resistance to the top side. And then, you know, horizontals 51 spot 13. But it may well be that you meet this downward sloping supply line should you push the top side. And so 49.50, 49.70 be the first level of resistance price action should look to beat. Based on the horizontals, now that it's tested the 50 simple, it's gone through on the 30 minute, it's gone through the 200 period. So if you hold this, it's very bullish, and the 50 simple would likely carry up. You recover the 8 period moving average, is just above that horizontal. It'll be also outside of this downward sloping supply line. Then you get a very positive reaction in price action, would at least test back up to 53, maybe even go back up 59 and see that move up to 69. But in advance to that, I'd be wary about the breakdowns here. You know, you've got this cross, price action test that at the end of this trend here, and you see your 50 simple slink back below the 200, price action come back down to the golden pocket at 39.50, and that might be, well, what happens if you hold the 236 at 43.56, then everything's still game on, you know, from what could potentially be, it's not a bull flag anymore, price action could have rolled over. It would also put in bearish divergence between these two highs. I mean, that speaks to the need to the retest. The 200 period moving average at 45.58 is a more common place to go. That is below the 236. So if you make it to the 200 period moving average, I say more, but it's very common. I mean, pardon my misspoke there. The 236, you're just stick on. If it's within the previous resistance areas, 200 period moving average, highly likely. So that's what you'd be looking at should it break down from here. But I don't know, right? It might actually do that. This 15-minute time frame, you're in the bearish control zone. That's not great. You failed there. That's not great. That's ignore that, right? Ignore that. Oh, get back over here. Get back over here. Lows on this thing. This thing, that's correct. That's correct. Okay, so 236, you're right there at the minute. This is an entry for some people. It's horizontal level and price action. You can see that perhaps, you know, these bodies would be an area at managed risk. It's quite a significant percentage, but it wouldn't be my type of trade, but other people will take it. Then there's 382, and then it's like the golden pocket. I mean, the golden pocket's jumping out at me. What's this other yellow horizontal? This is a 236 of a more dominant Fibonacci. It is from this low to the previous high in the trend. So like that's the retest. It's also the 200 period moving average on the 15-minute time frame at 43.80. You know, that'd be where you would maybe buy more, right? If you were looking for this to be bullish, you would, and then you maybe buy it as it breaks through different horizontals and try and get the final bullish kick up top side. If you're like a crazy momentum trader who's chucking money at it all the time, and I say crazy, it's quite fun, whatever. But those sort of people who do it like that, maybe you would be looking for that retrace and then start a big position building and pushing it at levels, and then like liquidating as it made it to certain levels up here. That'd be what people would be doing, aiming for 69. I know how some of the people are who trade this thing, and I know how they work, and that might be so, you know, so yeah. I think TWAC's got a lot of potential. Might have in the short term a little bit of a room to fall back down. Another $4 off it or so would be like significant for entries, but not significant with regards to market structure, and it could then go on to the top side. But then, you know, is things bullish enough in the overall market for that? Is the news events recently bullish enough for that? Because you can see that 1, 2, 3 highs, 1, 2, 3 lower highs on the 15-minute here. You do have that bearish divergence. This could roll over if it doesn't hold that 236 and it doesn't hold these areas where we've got horizontals at 43 and whatnot. Then the golden pocket's calling for it, and that would be continuation of a downtrend. And though looking left, you can see you're at levels where it might bounce from, and here you can see you've broken a previous trend on the top side. It's only a 15-minute, but we take that to the hourly, not all that crazy. If you did manage to break those horizontals and that previous resistance at 54, you would likely go straight to fill in that gap at 68, 69, and get the full side of the move. That's the hourly gap's dead interesting. That's the 2 hours also got one at nearly the same place. And then the 200 period moving average on the 4 hours up there as well. And it's like, I don't know if it's going to happen right now, but it just definitely seems like it's going to happen at some point. So what do you mean, dibble-a-dum? Go away. No, not everything. Not everything. Great, and we're back. And that was DWAC. And thanks very much, Natural Friend. That was brilliant. It looks like there might be a retest. Price action's doing that at the minute. It's all lots of natural levels where it might get caught. If it does, could be very potentially going to 69. Could be exciting to see that move up there. It's nearly, you know, a big percentage chunk on price already. It's down 8.38. So we've had some of this move back. Some of that's to be anticipated though, because we had a gap in there. And then 236. It's just a little bit of a hop, skip, and a jump. I see we wick below it, body's closing above it. It's also playing, so it's already playing some level of significance. We'll see what price action responds to that. If it doesn't manage to hold, you know, 39, we weren't there all that long ago. It might come back that sort of area. Overall, the trend isn't like desperately bullish. You know, it's only been around for that so very long. It's made it there. This is at a low ultimate, like looking left, this is at a low. So, you know, it's like in terms of managing your risk, it's much less than it was at these highs, which is where everyone's all excited. And there it's bearishly divergent, like we spoke about. So, you know, you test resistance, this is it. You got some bullish divergence here, maybe come up, test support. You've done it there, go again, test resistance. So, what further 50 simple in a golden pocket, 200, there's another time frame. It's just very, 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 like it's going to be difficult to break those levels, which is like maybe sounds pessimistic. But because they're also god-darsh obvious, then it's kind of positive. The price action might get stuck towards there. I mean, like even if you're like not positive about DWAC, right? Even if you're like for some reason really, really, really negative about something, which is just like an acquisition vehicle. But well, let's say like you are, and you're desperate to short it. From here, you're going to have to, like, you'd have to wait until it broke these previous lows, 36.70, or you'd have to wait till, why would you do that when you could, the low risk entries back up here, right? So, why would you bother entering here? You wouldn't. So there's no like incentive to short in these zones at all. So it starts the price action start getting up here. It's not like there'll be like loads of boot bears that are like, this is it, guys, let's fuck it down from here. No way. They'd be waiting for here because there's so much less risk, and then also way more opportunity if you are short. And then that's why people wait. Like also, like these leverages aren't buys. It was back at these at the 236 and whatnot, which is why some people bought it. Why anyway? So that's what I think with DWAC. Thanks very much, such a friend, legend. Oops. What else did I miss? I think I maybe missed things. I answered Komodo Dutch, I think. Yes, about LRC, and then. Does TA work or better off the log? We answered that with Komodo Dutch, and then Elbigger Matthews. Thanks so much. Natural friend, cheers, buddy. DWAC. Did DWAC? Oh, you asked me for something else before. Yes, NGD. Yes, let's do it now. New Gold Inc. Here you are. What you been doing? Down 3.73. Oop, gap. Oop, down to this. Oh, look at this. Holy sugars. What? What? Right, so this is great. It's come right back to this. Like, that's great news that my TA looks so good. But what's that actually mean for price action? Well, I mean, that's not as good yet because it hasn't done the rest of it. And this is the bad part. Well, it's done the bad part dead good, right? Back at close to that potential entry. Did that put in a gap doing that? Close. We're on daily time frame. Oh, that's where it is at the minute. This is where it opened, which wasn't a gap. And anyway, no, it wasn't a gap from there, but it was a gap from here. And you didn't quite manage to close that. It's still there on daily time frame. Ha, getting so close and not finishing it off. At least that's what it looks like. It looks like there's still a bit of a gap there. Get on it. Right. A minor assault. I would send Jen to investigate, but she's very, very, very busy with shitloads of other gaps at the minute. And she's overworked, in fact. It's kind of sad, but she's a trooper and she kind of she's got the results. She keeps slapping them on the board. She's slamming them in the grinded bars. It's just like fantastic work, right? She's goddamn freaking Judge Dredd Jen. She's killing these gaps. This is even talking about her is making the color of candles change, right? You walk past plants and they bloom in the middle of winter. Detective Jen, this is incredible. So stochastics potentially pushing to the top side on this thing. We're on daily time frame. We've got a potential move there that could be good if it does turn to the top side. I mean, it doesn't necessarily mean it's going to. It's in the shithole and it could stay there for ages, which would be terrible. But it looks like it's turning to the top side, and that's kind of positive. It's actually got a negative slope on it right as I speak about it, so I should just shut up talking about it. Then the MACD histogram suggests continuation. You've had this potential cross coming in on daily time frame from miles away, and price action is miles below the 200, so that's not exactly inspiring me with confidence. And then I look up to the RSI and it's like, oh my goodness gracious me, it's in the bearish control zone. That's not brilliant. Daily time frame in the bearish control zone. This come down just to get to Tradespotting things and then go green. Can that be real? Can that be really happening? Anyway, 200 period moving average is at 1.52. Price action is at 1.41. That would be a lower high within this trend. You could try and get there. You can see that so far, though, we have put in lower highs already and lower lows. So aiming to the top side, maybe you wouldn't be that aspirational, Kitty. So up at 1.47. That's 6 or 7%. 6 or 7 cents on this thing at the minute. It's not hugely significant for the trend, but you could easily see it doing it, especially because so much of this candle is wick already. The volatility on today, quite what's the dispersion, the range of dispersion of prices over the current opening period of trading today has suggested that there could be further volatility throughout and closer to close. 8 period moving average going through that horizontal, and I have a big circle here. What is it? A gap? Why am I drawing it? So, yeah, wonderful. There's a 200 period moving average for. Let's go back to the daily so I remember what I'm actually talking about. Yes, the gap, the 50 simple, the 200 period moving average, positive splay, negative slope, and price actions below both. That's not wonderful. You're in the bearish control zone on the daily. That's not wonderful either. 4 hour, then you want to start pushing out of this. You've got a potential bullish divergence, especially if you include this wick, which obviously you would, right, because it's reality. And then bullish divergence between these two lows here. You've got class B bullish divergence. Maybe that's enough to give you a little bit of an inflection to the top side. You'd either be looking to a 236 or the 200 period moving average is at 167. So you get like that be your second target. First one would be kind of where you've already got to. I mean, I've already got a 236 on here. I've got that horizontal line marked out from this previous area, so that's where you're looking to in the top set. 147 where price action was at and has now dropped down to close to where we suggest. Like, what's going on anyway? I thought it was 147 earlier. It probably wasn't. Was I just saying that number for some reason? Anywho, what am I even talking about? Thank you, Jamie. You're very welcome, Natal friend. You're so welcome, Natal friend. But I haven't yet completely finished it yet. I've been going through it and I'm eager to give you a better take on things recently. Thank you very much, natural friend. Very generous. There's the 786. What's this low? Is this golden pocket Fibonacci? What is that from? Is it all time? And because it's from the high to the low on the previous. Yeah, that was from the high to the low on this thing, right? Yeah, over there. Okay, so this is the first golden pocket, and the top side of that move would probably meet you there. The downward sloping supply line at around what? 1.84. 236. You want to make it back above the 236. You'd be able to identify this as a local low. You'd be able to look left towards this previous low and say price action is higher than this low, way lower on the oscillator. That's bullish divergence. We'll push it back up to the top side. We'll find resistance in it around 188, maybe 182. That's what I'd expect to happen if this thing exceeds 1.47. Come on, go back above 147. And then close a 4 hour back above 147. And then we'll see you up with another 40 cents. And that'd be freaking brilliant. At that stage, you're meeting the downward sloping supply line. If you break it, implied target would take you back to the golden pocket up at 350 or above. But you might not do it on the first pass. At that stage, you'd want to measure the retracements. If should they come back in lower than 50% at 166, that'd be annoying. I'd prefer it to stay above 160 if it makes it back above there, and then push on the top side. We'll see. But 200 period moving average itself is up around those areas. Like, you'd really want to see it doing that and putting in a higher high on price action, or at least bullish divergence there. At that stage, you'd be looking for like to have started an uptrend though. So, I mean, it's there. You want to confirm this with a higher low. You want to be back above 236, like I say, 147. If it doesn't get there, it might come back down to these previous lows. $1 is one of them, and then 236 left is 0.88, and that'd be the next level if it doesn't hold these areas where it currently is in and around. In and around. Want to make it back above 236. Does it happen right now? Maybe not. Applied target, should you break out of that formation? Let's see what that formation is on a bigger time frame. 5 days. Downward sloping supply there. You've tested it a number of times. This recovery subsequent to that extra drop down. I mean, you could look at this as a bump and run, but you could, I mean, it be like that. Right, let's see. Interesting. Also, there's obviously going to be news. I mean, the way that these things work. Oh no, this is NGD. I'm back on NGD. Tradespotting, what you like? Yeah, well, I mean, overall market picture still very interesting, right? Things in flux. 4th and 5th of May. What's the date today? 3rd, 2nd. Say 2nd. This week could be interesting, like looking at the end of this week and see what happens with this thing. If it's back up at resistance at 188, 177 at the end of the week, that's super interesting. If it's, I mean, support, resistance, whatever, right? Resistance, Tradespotting. And then 236 at this stage, if it comes back down to 0.88, then I'd be worried about it for the end of the week. But overall, in context, I think things are looking positive, and I do expect this thing to test up. It might even get another 100% on this. There's this potential forecast. If this is a downward sloping wedge with like a potential bump and run out of it there, then that's nothing, right? You'll go back to test these previous highs, maybe even that might happen. But that's not what to trade for from here. From here, it's about managing risk as it is from everywhere, and you want to manage it from the bottom side of the range, closer there, better. You want to buy at support, not resistance. At 142 at the minute, if it breaks above 147, that could then become support, not resistance. You'd be buying it and going through that, and that'd be like, anywho, so a positive on NGD as long as it managed to hold certain levels, and if it recovers others, even more positive. And the 50 simple, where is the 50 simple in relation to the 200 on the daily time frame now? I looked at it earlier, yeah. So like this is potentially positive. Price action back above these at top side of this trend to see the 50 simple back above the 200, having slipped below it and then tested this area. So far it's okay, but you have kind of had a rejection on the 200 on the daily. You want to recover that, and you want to recover that, and you want to do it before the 50 simple slips below it, so that you don't have to worry about testing crosses and lower oscillations and whatnot. So yeah, a positive move soon would be better, sooner rather than later. The longer it takes, the less good it is. The longer it takes, the less good it is, though it doesn't have to immediately recover the 236. And if you don't hold these levels, you'd be looking down at $1.88. And that's what I think about that. And did I make a clip of that? No, I didn't, because I am a tube. And I thought, right, great, not enough editing work, give myself some more. I'm an idiot now. I am an idiot. Boom, biddy, boom, boom. Right, so what time is it? 4:30. It's a 2 hour already. Can't it be, because I was a little bit late. AMC Holdings. There's flash at 10.88. Price action currently at 15.08. Holding above the bearish control zone, but you lost the center line ages ago, as you lost a 50 simple period moving average on that daily. It's just like negative, and at the same time you had got slipped out the bullish control zone. You had a negative crossing the MACD. As you were rejected from the 200 period moving average, you had to turn around on the stochastics, and those three things came in reverse order, giving you clear examples of like clear indication of where price is going. High or low so far on this part of the trend, high or low. You've broke your trend line that was going to the top side on your RSI. Here come all the drawings, like I talked about that there. Could potentially be drawn this way, but it's not really. It's like that. It's broken it. At this stage, you're looking to hold support or a Fibonacci level. I'd say support at this stage is looking left, 1437, the first area for a bounce if that doesn't work. Be the Fibonacci's, like, well, horizontal's 1306. If that isn't, it'd be Fibonacci. You'll take it from there, could take it from here, take it from here. That's more accurate. This one to this high, there's your 1.13, 1160 to 1169. 4618 extension of the previous Fibonacci, and then in around the flash areas at around 1088. So like that's, and the 1618 there, like that's like stick on. Like you know, other assets, that would be the only place you'd enter. There or lower, and 1066, 1030. These sort of levels, right? There will be loads of buyers there looking left. It was a breakout point from that part, and it led to a huge move. So if it doesn't hold, it's significant. If it does, and it probably does bounce, especially at the first pass, it'd be the first, like it'd be way more likely to bounce than any time since this low here, right? Way more likely than, like it's equal likely to this. Way more likely, like this. That was so obvious too with the bullish divergence, right? So this was really obvious, this was really obvious, and then that would be so obvious, and then this resistance up here at the 236 when we break down 200 period moving average a minute at $27, that's really obvious. Daily time frame, 4 hour down here, a lot of drawing, you can't see what's going on. The 886, you don't want to break that. If you do, then you'll be talking to these lower targets, and looks like it's maybe just about to happen. Let's see. Very simple is meeting resistance at the 200 period moving average. That's where the golden pocket is. If you do get a positive inflection to the top side, you'd likely never make it to 27. You'd find resistance, well, not ever, but you wouldn't do it on the first pass or the second or the third. You'd find resistance at $20 and come back down likely. Do I see a reason for that happening right now? RSI says definitely not. MACD says don't be silly. Or stochastics say we've already told you this 3 times before. So bearish, bearish, bearish. 2 hour, not seeing anything new there. Slip below the center line. Resistance, bearish divergence, continuation divergence. This looks like it's going to go down. It could go down fast. It could go down now. 1503.886 about to break. This horizontal is not going to hold support. That 2618 is not real. 113. This thing could break down any minute. It could break down right now. 5 minute time frame. When I say break down, I mean get to those entries that we're looking for and we have been looking for a long time. Like when we drew this back here, you know, your penalty at that stage, if you don't score it, it's going here. You did. You hit it. It was a freaking top corner. Boom. But actually, it was Roberto Baggio, and he's bang, skyrocketed it. Whoa, right. If you were trading it, great. If you weren't, unlucky. I mean, like refusing to release or reorientate. I certainly advise people to do, always have done, manage your position in the best possible way. It doesn't mean you necessarily have to sell shares, right? I'm talking about reorientate, reorganizing your position. If you've managed to make a move that was hugely profitable and that you were trading a different instrument or do it and you are reorientating and improving your entry position and making profit, then congratulations. And if you're somebody who thinks that's not possible, wants to argue with me, that's also possible. You can do that. Just make your way to the nearest peer, and there's the very simple below the 200 on that 5-minute time frame. These both forming resistance at this stage of the trend, putting in negative formation. At this point, you've got, you know, bearish continuation divergence expected as you rejected from a 200 period moving average. You've lost 8 simple, you're at the 86 and got bounces there a number of times because it's really, really important that you get it. You've also a potential flux of volatility incoming now. And where will that be? Well, will it take you back to the top side oscillations and then fail again at 1541? There's a horizontal level at 1560. The golden pocket that you failed at most recently is 1875. You get there, crazy, right? That's not happening. Looking left, there's resistance at $17. That's the previous 786 and 86 as well. Ugh. And this is like brutal here, so price action probably fails. It probably does it soon. And if it does, be looking at 1450 and then 1346, and I'd be looking at 1183, and then I'd be looking at 1066. There's 1088 on the way, and 4618's up there, right? So that, you know, could happen any momento. So that's that, and then back to the Gemma. What's the Gemma saying? If the AMC's falling down, what are you doing, Gemma? 120, $5 off there since we last looked at you. 4.65 bucks off. 3.72%. Lower moves there, down towards 2618, but not yet, 118. So there it is. And the volume confirming those moves on the 5 minutes. So I start talking about it, price action starts falling down, then I should just only say positive things, right? So that's pretty good, right? Pretty good. I don't know, I've distracted myself. I only really wanted to say super positive things. Look, setups changed, everything looks slightly different, you know? Everything looks slightly different, so I'm trying to reclaim some of my house because my life is completely and utterly, in every aspect of it, emotionally, practically, everything revolves around these streams and trying to help push them as much as possible and hope them make them sustainable and positive and good for the audience. And so it does do my own self disservice by saying anything negative or focusing on the idiots, which there always will be some, then they're not sustainable. And I shouldn't give them any breath because then they'll die sooner rather than me giving them any encouragement. So what I wanted to do, and I am doing, is staying positive with all this lovely setup and then all this lovely puppets to talk to, and I'm not on the internet, and then all these lovely assets to trade, you know, especially when they get back. There's 200 period moving average meeting, and what's that? The flash at 126. That wasn't where we were. That was where we were hoping to go on topside oscillation, or was it where we were? I can't remember. Anyway, it's still where we're hoping to get to. So flash, 200 period moving average there at the minute. Looking down, you can see bullish divergence between these two lows. You know, this could be a reason to cash back up into the 50 simple or 200 period moving average, and you can see a couple more bucks on price action here. AMC though looks like it's about to fall down completely, so we'll see. Right, both look like they're heading in opposite directions in the tiny time frames, and that doesn't usually happen, nor does you would expect to see it. Def and Vanish Rich, thanks Tradespotting. You're welcome, Tradespotting. What is the symbolism of Rocky's mask? Symbolism? Good question. Hello, peeps, and Tradespotting. Hi, Kim. How you doing? Brilliant to see you. I just wanted to pop in and say hi. Going out to work in the garden. Awesome gardening. Love a bit of gardening. Thanks, Kim. Great to see you. Hope you have a great time out there. Great time out there. And you've got nice weather out in the garden. Yo, David McConkey. How's it going? When Tradespotting is talking about time frames, is the term used turnip farm? Reference to Dinosaur Jr.? Who knows? Where's Seamus Classic? Where is Seamus? What's he saying? Later this month will be 1 year since the grilled cheese and Scotch video that helped me find this channel. He's a fucking legend, that guy. He's a fucking legend. You know, it's like a ghost. He's like that Ukraine ghost guy who keeps shooting down the Russian planes and that, and like doesn't look, and then just disappears off. And you're like, where is he? And somebody's like, he's in McDonald's having fries and that. And you're like, no, but where is he? And that. And you're like, it's good. No one knows. It's grilled cheese and Scotch. Yes, that video is fucking incredible. There's a couple of them now. I have to thank that guy every time I think of him. Thank you so much for what you did for me and brought you and me, Seamus. That's brilliant. Anybody else, like, you know, that's, you know, you see that video, we probably like each other if you like that video. Thanks everybody for being here. JS Tradespotting. When it storms, we don't wait for the storm pass. We learn how to dance in the rain, never break the chain. Thanks, JS. Very nice. There's Mighty Red, you legend, Mighty Red. Blue band still here. Oh my goodness. Flippin' heck. Flee, fly, flee, flow. Flee, fly, flow, flow. Who's that walking across my bridge? Late to the party, DMC. Average monk trade one. Happy Monday, Jimmy. Happy Monday, monk. Legend. Thanks for the facts there. I did the clip on Friday and then I put the video up today, so hopefully it didn't go completely wrong. That was insightful. Thanks. Well, we're talking to me, hopefully. Good morning. Where is my fannies at? Nice to see you. Great to see you all. Thanks, everybody. Channel Lipton, keep it Lipton. The moose goes to everybody. Don't forget to like. There you are, friend. Thanks. Have a great week, everybody. Yes, I'll see you tomorrow. Thanks, David. Thanks, everybody. See you tomorrow. Hit that like button and whatnot.